right, 21 minutes after 11 o'clock. Not a bad-looking day out there, Robin.
It's gorgeous.
The only thing about it, though, there's no air conditioning out there.
No, it's all in the wild. You have to take it as it comes.
People come down here from all over the country, all over the world, as a matter of fact. We have people moving to Florida, and quite often they find themselves in a different financial situation. The taxes are different here. Some of the stuff is more affordable, depends on where you live. And I know from some of the retirees, sometimes retirement funds are all of a sudden some money that they just, oh my gosh, I got this money, I don't know what to do. I'm not so sure about the taxes. So let's have somebody talk to us about the subject of money, I guess.
Mm-hmm.
Gene Goldman is the Chief Investment Officer and the Director of Research at Cetera Investments. He's talking to us about the mid-year market outlook. So let's find out about this. Advice is always a good thing, right?
It is, especially in this arena.
Gene Goldman, it's an honor to have you on the show. Good morning.
It's my pleasure. Thank you, Larry. Thank you, Robin. Love hearing about the Florida weather this morning. Sounds great.
Where are you? Where are you calling from?
I'm in Los Angeles, so it's gotten really warm. It's gotten really cold here. Now it's about 65 degrees here, so we're really frigid over here. So.
Yeah, I love LA. We'll probably be out there in September-ish, is what we're thinking. Yeah. So let's use that as a starting point. Would the advice to somebody needing money advice be different in LA than it might be in Central Florida?
No, I think we think investing right now. I think obviously we're in a very interesting time period. What we've been saying is that we just finished our mid-year outlook and we're calling it mixed signals. There's lots of mixed signals in the world today about the markets. One side, in the U.S., we're seeing data is cooling. Manufacturing data is slowing. Consumer confidence came down today to a 2-year low, but data overall is still very expansionary. 50-year low in unemployment, more jobs than people looking for jobs. So that's positive. Valuations are a little high, but they could weaken because of earnings weakness. And then the last point, the bond market is saying a really big mixed signal. It's saying that yields are low. They're concerned about something in the future, but at the same time, high yield, the risky parts of the bond market are saying great times are ahead. So lots of mixed signals in the market. So whether you're in Florida or California, expect market volatility as the market digests these changes.
And does the market depend on foreign trade relations?
Oh, of course. That's a huge catalyst. This weekend, we all know the G20, we all keep talking about the G20 meeting. And, U.S. and China are expected to sit down. And we could see some type of resolution or some type of, good news coming out of it, we hope. We do believe both sides are very incented to get this done as soon as possible, because you're seeing the effects on both economies, both stock markets. You saw it happen in May. And then lastly, why we think the U.S. will actually do better is demographics. Chinese demographics are really changing. They have a very aging population. Case in point, 2017, lowest birth rate in China since 1961. Lowest birth rate, aging population. It's hampering their ability to go to a consumer-driven economy, which the trade war is hampering all those effects. We definitely think we have a good opportunity.
And did Theresa May step down affect anything?
I think Theresa May step down is interesting. It was probably expected. I think the bigger issue is Europe as a whole. That's one of our big worry spots. Europe is having a tough time. You've got growing populism. So you saw it with Brexit. You saw it in Italy and Spain. So this is causing pressure on debt to GDP ratios. Other aspects is that just economic weakness in Europe. Our GDP in the first quarter was around 3%. In Europe, it's 1.6%, and it looks like it's worsening. We saw some data today that was just not that great. So Europe is having a tough time.
So if we partner with Cetera as individuals, is that different than partnering with you, for example, as a business?
It's the same thing. So we're a broker dealer. We have 8,000 advisors all across the country. They're very independent, looking at trying to find the best investment recommendations possible for you and your clients and your listeners, excuse me. So providing the best investment advice that we can offer all over the country.
Does the the ease of information in today's world, does that make it easier for somebody, or is it still better to actually sit across the desk from a financial advisor?
I think it's both. Information ease is definitely useful. So like, for example, Twitter and other tools that we can use to disseminate information. But at the end of the day, sitting across from an advisor, and this is what's a key point for our advisors, sitting across, understanding, seeing your emotions, understanding how you think about your perspectives, your concerns. That's very, very important because, our advisors create personalized solutions for each of their clients. And it's based on, your situation, Larry, your situation, Robin, as opposed to just doing a blanket cookie cutter approach. Our advisors sit across from their investors and clients and really focus on creating something specific for that specific investor and client.
How often should we reevaluate our finances? Twice a year or more often?
I say twice. I say more often than twice a year. I say once a quarter when you get your quarterly statement. It's always good to be aware of what's going on in the market, what's affecting the market, looking at data. Why is gold today at the last time it was at this level was since March of 2013. Looking at information is always good to review, but that's the work of your advisor to help you navigate that. But looking at your accounts, especially since we are in the longest bull market ever, it's great news. But a lot of our accounts, a lot of people have had too much risk in their portfolios. Now's a good time to reduce some of that risk, and sitting down with your advisor to get you and rebalance you back to where you should be is very appropriate today.
Since there are some college students today that appear that they don't want to repay their student loans, what should parents of potential college students do and invest in so they have enough money for their children to go to college?
Yeah, obviously the news has come out recently in terms of, some Democratic candidates in terms of, canceling student loans. Obviously the devil's in the details in terms of how will this be paid for. Right now we have $22 trillion U.S. national debt. I mean, that's highest since World War II as a percentage of GDP. So it's a lot of debt. So how they pay for this is interesting. I think, definitely staying for college is important. I think college, obviously the world is changing with artificial intelligence in terms of what types of degrees are going to be very important going forward. But definitely college, definitely the skill sets are definitely going to be very important going forward.
This is a lot of research that you have done into this arena to make sure that people like Larry and myself, have all the advantages to give in the future.
Yeah. Yeah, so we have our best. Oh, sorry about that.
No, it's okay. There seems to be a delay, and I wasn't sure if you heard what Robin had to say there. I wanted the listeners to know how to find out more information. Is the website a good place to start?
Sure, definitely. Our website is cetera.com, so CETERA.com. There's also a Twitter page. On Twitter, it's Cetera, CETERAIM, like investment management. We post a ton of data and information constantly about the markets, about what's going on in the economy. Great tool, great source to narrow down all the information to one simple source.
Very good. Gene Goldman, it's been an honor. Thank you for being on the show with us today.
Robin, thank you. Larry, thank you so much. I look forward to talking to you guys very soon. Thank you again.
Thank you. All right, we'll be right back.